Good evening and welcome to Upfront on the Joy News channel. Tonight, CBG becomes the latest dealer bank to have its foreign exchange trading license actually seized by the Bank of Ghana, adding to a tall list or an existing list of some 4 banks who have had their licenses actually suspended by a month since the beginning of last year. Tonight, we asked a very simple question: if this is actually a symptom of a larger regulatory gap. After this short break, I will introduce my guest. Stay with me. You're welcome back to Upfront on the Joy News channel with me, Isaac Kofiaje. And just like I said, we are having a discussion on the suspension of the foreign exchange trading license of the Consolidated Bank of Ghana, which is CBG, and the other 3 banks who had the same fate or suffered the same fate since last year. Now, I have 3 gentlemen with me who will be helping me break down this key issue. Professor Godfrey Bopin is an economist and professor of finance at the University of Ghana Business School. Dr. Richmond Etiahene is a banking and corporate governance expert or consultant. Professor Lord Mensah, he is an economics professor at the University of Ghana Business School. Gentlemen, you're welcome to the show. Hello, gentlemen.
Thank you,
Hello. Can you hear me, please?
Yes, I can hear you loud and clear.
Okay, then. Good.
Thank you, Govi. Can you hear me?
Yes, I can hear you, Doc.
All right.
Yes, thank you, Govi. Good evening to viewers and listeners and my co-panel.
Good evening. It's a pleasure to have you on, Professor Godfrey Bopin and Professor Lord Mensah, as well as Dr. Richmond Etiahene. Now, gentlemen, kindly permit me to do this analysis before we go into the main issue. So if you have slides, I want to take you through the number of banks and fintechs that have actually suffered this fate. Let's start with the 26th of the 11th month of 2024, which is the October 2020. Exactly. I mean, we have the 26th of October where Consolidated Bank Ghana, which is CBG, actually had its license seized or suspended for a month. Next was somewhere around March 18, 2024. Guarantee Trust Bank also had the same situation. On the same month or the same date, the First Bank of Nigeria also had the same instance where its foreign exchange trading license was actually suspended by the Bank of Ghana for a month. Fidelity Bank had theirs suspended on 29th of June 2026. Now we go into the fintech space where so far, tracking as far back as 20th of October 2023, almost exactly a year ago, ZPay suffered the same fate, had its license seized or suspended for a month. There's also TapTapSend, which has become the latest to suffer this phase. Let me first start with Dr. Richmond Etiahene, who has actually worked in this space for a while. Now, on the corporate governance aspects, is this a simple case of regulatory gap?
Well, you can have the corporate governance gap and then you have the regulatory gap. The reason why I'm saying that, if you have effective board or governance system, these things will not slip through, let alone get into the regulator. So you can consider both the corporate governance gap and the regulatory gap. Because if your board is very robust, understand the business they are in, and know the nuances of the business they are in, I mean, the board should be able to taking this thing out for a long time. But unfortunately, if you have board who do not understand the nuances of international finance or international banking or international trade or international remittances, then you're going to have a challenge like that. And for me, I look at the corporate governance issue and I look at the regulatory governance. Because talk about the regulatory gap is that, I mean, this didn't start yesterday.
Yeah.
It didn't start yesterday. It started quite a long time. And the regulator should have seen, especially if you have what we call a conduct regulator and a supervisor. You know, in Europe or in UK, we have the conduct regulator who sees the business. And then we have the examiner or the supervisor who sees compliance. Unfortunately, it managed to slip through, only to be told that they have to be fined or they have been suspended and then possibly fined. So for me, I consider the two very, very critical. The board, the failure of the board, and regulatory failure. So that's what I'll say for the time being.
I mean, Doc, I'm looking at the data and you can actually see that the period or the duration of the suspension is almost a month. And we started somewhere last year. We've had a similar instances playing out this year as well. Is it the case that the punishment dished out by the regulator, which is the central bank, isn't enough or isn't, stringent enough?
It's not just a punishment. Always, if you want to sanction, fine. But the question is that compliance is key. Yesterday, if you read the notice, it's talking about AML issues. And when you have AML issues with your correspondent bank, you can be taken out from the correspondent bank relationship because no bank in overseas want to do a bank that is not AML compliant. That is where the issue is. And it can even move further to businesses going from Ghana. Because, we have to transact business with correspondent bank overseas. The JP Morgans, the HSBC, and the Chase Manhattan, and all those Credit Suisse and all these people are looking at compliance with AML. That's why the governor, in his statement to them, he is now adding, in addition to the foreign exchange issues, there are the AML issues. Because the AML issues are very, very, very serious. Because that's where the terrorist financing can come in. Because people have got huge sums of money, they can cause a lot of troubles in the international arena. So that is why the governor has now extended his line of argument that it's not only the foreign exchange compliance, the AML issue is there, the terrorist financing issue is there. That makes the gravity of the issue is not just about sanctioning. We need to revisit it, the type of governance we have, the type of corporate governance, who serve on the board, and do they really appreciate and understand what the banks are doing? So that is why, if you go to let me end here. The state banks governance, I've said it before, and I'll continue to say it. It's a bit, I won't say suspicious, but it needs to be reviewed very, very well to ensure governance compliance.
Now, Doc, let me bring in Professor Lord Mensah. Prof, I want to pick your thoughts on this. If you think that this is a larger or a symptom of a larger, a problem that really exists in the banking system.
I'm continue.
Yes, Doc, I can hear you. Prof, I can hear you loud and clear.
Good. It's unfortunate that I've got a light off here, so my back.
Oh.
So, if you look at the economic structure, and you probably look further into the assets of a typical bank in Ghana, you will come to appreciate that banks are not making money or they're not making profits as a result of their core business, which are giving loans and taking people's deposits here and there. It has to do with investment in government securities and then forex market operations and then things that I'll put it, bank activity that, really gives them money. And so most of these banks are tempted to, veer off the core activities, and when the opportunity gives itself to, go into things that can give them money beyond, just giving loans, you see them doing that. And that is exactly what is happening in the banks. Let's take what has happened to CB. If you go into, the ownership structure of CB, it tells you that it's 100% government. And this is a bank that was formed as a result of, restructuring that we had in the banking sector, making about 6 to 7 banks together. And so I was expecting them to do the right. And then the economic structure.
Hello, Prof. We've lost connection with Professor Lord Mensah. Let me bring in Professor Godfred Bopin. Prof, same question. Do you think that this is a symptom of a larger problem?
Well, it's not surprising. I think that if you look at the data discrepancy from remittances and you look at the regulatory ecosystem, which also fueled unsound banking practices in the run-up to the financial sector cleanup, which also included regulatory forbearance and then again weak governance practices by some of these banks. You get the impression that there are considerable gaps in the system that players would want to take advantage of, especially in an economy high in high interest and all of that. Some of these things can happen, and it's not peculiar to only Ghana. Even in well-developed countries, we've had instances of big banks.
Right, Prof, can you please amplify your voice a bit? I'm struggling to hear you.
Okay.
Yeah.
Yes, I was saying that what is happening is not entirely strange, because even in well-developed markets, we hear of infractions and they get punished and all of that. But I think we need to look at it within the context that when it comes to exchange regulations, foreign currency and all that, because for a very long time, we have experienced cumulative pressure, the local, and also that it's an election. The signal has very, the Bank of Ghana is very tough, and probably will monetize every little action in the system. Because if you look at Bank of Ghana's own poster right after the financial sector cleanup and all of that, you can see that a certain approach that in for purpose intended to greater compliance and all of that. Because if you look at this particular regime, the second term, let me put it that way, the CD has suffered, or the CD has had too many rounds on it. That is certainly not good news when you look at it in terms of maintaining price stability, which also includes exchange rate stability. And therefore, the Bank of Ghana will be tough on them, because if you look at the rate of depreciation, even with IMF-supported program, year to date, clearly you cannot say this is stability. You cannot describe this.
More than 25% at the moment.
Yes, almost 30%.
Yeah.
So you cannot say this is stability. Your current has lost more than 25% with value from the beginning of now. You cannot put. Okay. And also it's an election year. And therefore, now the real is that because we don't have sufficient dollars and we are using regulation to solve fundamental issues that's solved by demand and supply, the more you want to enforce that regulation, the more market players want to develop ways to offset that regulatory. That is part of what is happening here. Because whether we like it or not, the economy is largely dollar. Okay. And all of that. It's import dependent. Your currency, the functional trading currency or reporting currency for Ghana, is not performing all the basic functions of money, including store of value. Okay, so you cannot say the CD is a good store of value if it had lost more than 25% of its value and all of that. So market players, not only financial institutions or fintechs and the rest of them, market players would want to see how they can protect themselves and all of that. So if you don't tighten the regulation, and sometimes I've had some issues and reservations about some of Bank of Ghana's measures of dealing with exchange rates, dealing with inflation and all of that. I mean, we have reservations and all of that. But of course, this is the path they have chosen. So it's not surprising. I mean, the contest makes the central bank a bit more aggressive in terms of enforcing compliance because they are very little in terms of good news display. The city is depreciating. They are keeping rates that is very low. Okay, so Bank of Ghana has the official rate. The transaction rate is in the black market. If you look at the divergence between the Bank of Ghana's official rate and then this one. Then let me give you an example. Hello?
Yeah.
Now, to give credibility to the gold coin that Bank of Ghana introduced, you realize that the rate for convertibility is not Bank of Ghana's official rate. You know why? Because nobody believes that rate. Okay? We prefer to use the Bloomberg one, so you can check the conversion rate they will use, not the Bank of Ghana's official rate.
Yeah, in fact, they actually indicate that they'll be using the Bloomberg closing day, exchange rates to sell that gold coin and not the interbank rate.
Why?
Definitely, I mean, there's a huge gap between what the interbank rate is offering versus that of the Bloomberg.
It is fair. Okay, so we are saying that for investment purposes, it is fair to use the transaction rate which is out there. But for internal transactions and all of that, it's okay for people to be downplayed in one way or the other. Let me put it that way.
Do you think that's the reason why we have now 4 banks all going against the Foreign Exchange Regulatory Act?
There's pressure in the system, but I want to believe that these banks should know that the Bank of Ghana will come hard on them once it is discovered and all of that. So I think it's part of sanitizing the system and all of that. So, and also, look, whether we like it or not, if you look at, we said it about 2 years ago, more or less that, if you look at the losses on the books of Bank of Ghana itself, right, occasioned also by the domestic debt exchange and exchange rate losses, Bank of Ghana itself needs to rebuild. And to that extent, they will monetize every little infraction in the market. So you should know that. And then reconfigure your system accordingly. Now, but I think it's been a challenge for us managing or maintaining exchange rate stability. In addition to stability when it comes to inflation, interest rate, and all of that, it's been a struggle.
Well, I understand. I still have Professor Lord Mensah on the line. Prof, I'm having in my hand this interesting data that talks about the foreign exchange earnings of these 4 banks that have experienced this 1-month suspension from the Bank of Ghana. Let me start with the Consolidated Bank Ghana, which is CBG, in 2021, just last year. And I'm actually picking this data from the Auditor General's report. They actually, in terms of their foreign exchange earnings in 2023, was $562.2 million, more than $500 million for CBG. Now, GT Bank, Guarantee Trust Bank, was $758.8 million in that period just last year. Then Fidelity was actually the highest, $2.8 billion in terms of foreign exchange earnings in 2023. And the First Bank of Nigeria was $263.3 million. If you add all of this, you get close to $4.4 billion. Do you think that revealing some of these regulatory, infractions, are we sitting on a time bomb? And is this one of the reasons why the CD is at, you know, if you go to the black market, some people are quoting 17 cedis, 50 pesos.
Yes, Kofi, I couldn't finish my earlier
Yes,
submission.
you can go ahead, please.
I was giving you the signal that the market is really ripe for exchange rate, you know, market abuses. And that is exactly what is happening, you know, to these banks. If you look at the economic structure that we have now, banks are not making money on retailing. I mean, let me put it, retail banking. They're making money on investment into securities and then the forex market. That is what is giving banks money as we speak now. So the core banking activities, which is required of a commercial bank, we're not getting it from the banks because of the economic structure we have now. Because of the high interest rates, banks are not able to lend to individuals and businesses. And so the avenue and then other means of making money is basically through investment activities and forex operations. That is what is giving the banks money. So I'm expecting that this is bound to happen. And the Bank of Ghana should know that once the economy is not giving the banks, you know, a way to go into their core activities, the banks may want to restructure their operations. And in some cases, allowing some of the, you know, going beyond regulations. And so they should have tightened the security in those areas. I mean, because there are possibilities that there could be abuses here and there, going beyond regulations to make more money. So from where I sit, and then looking at, you know, the way the exchange rate has been behaving over the past years, it's one of the best investments you can have. And I'm not surprised that the banks are concentrating in those areas and in some cases going beyond what is required by the regulator. But then we should understand that in banking, right, one of the key risks that sometimes is difficult to measure, you don't normally get it through the banking operations and other things, is reputation. Now that, you know, the regulator has placed, you know, these restrictions on them, I mean, one way or the other will affect its reputation. In other parts of the world, these banks would have, you know, sometimes been out of business. But here, we don't really appreciate, you know, the dynamics of some of these things. And, you know, the market itself, most of the time, is quite novice when it comes to, you know, some of these operations on the banking behavior. So from where I sit, I think it's the economic structure that has availed itself, you know, in a way to give a direction that, look, the forex market or forex operations is one of the best ways to make more money. And as a result of that, if the regulator goes to sleep, we can tap, you know, and go overboard to get more money from there. So I'm not surprised to see these things happening on our market.
Well, thank you very much. Now, Dr. Chine, I mean, $4.4 billion in terms of foreign exchange earnings for these 4 banks that have had their license actually, you know, suspended for a month. Do you think that this is having any form of impact on the depreciation CD?
Thank you very much, Kofi. We have to get it clear that supply and demand is all about depreciation of the cedi. I mean, if you don't have, in Latin, it is called nemo dat non con hebet. No one claims what he hasn't got. At the moment, what is the supply link of foreign exchange in Ghana? If it had been previous 2 years ago, 3 years ago, Cocoa Board would have syndicated about 1-point-something billion, and the first tranche would have come now to mitigate the currency. Unfortunately, who wants to deal with a bankrupt country? No investor would be interested to come and syndicate cocoa. I mean, when people hear that we are going to buy internally, our risk is so high that if you want anybody to come in, even for syndicated loan, he's going to ask for a premium interest. If it's say 10, he will ask for 20. And that would affect us. But unfortunately, instead of we looking internally and looking at how Because if you look at the balance sheet, the audited accounts, even as I speak to you, the highest component is remittances. Last year, Bank of Ghana recorded 2.8 billion as against the World Bank record of 4.63 billion. If we were to track, trace, and capture, I want to show you, like what the Bangladeshi do, what the Sri Lanka does, they track it so much that about 90% of remittances come through the banking sector. But in our space, somewhere 2019, somebody came with more innovative and lucrative strategy. Let us come with fintech. And that has been the woes of the currency. I can confirm with all facts and figures that our current situation, all foreign exchange coming out from remittances are not reaching the banks.
So are you directly saying that, I mean, the fact that we've not been able to document, track, or trace some foreign exchange inflows into the country is the main reason why the CD is at its current level?
There is no two ways about that. I mean, the economists will tell you, Lord Mason will tell you, Professor Bobkin will tell you, it is about supply and demand. The demand is there, but the supply is not there. So that is where the price fund is level, and it's going to go further. When Lord Mason was saying about our core business, from my experience as an executive at the bank, one of our core business in the 2008 to 2000, before I left for banking college, was our transaction in international business. Because if I establish letters of credit, I can have commission up front end, and at the same time, I can utilize the foreign exchange and be able to sell the foreign exchange to the customer and get my money. So international trade finance or international trade business is a key component. But what I support Professor Lord Mensah is that our core business of lending to the private sector, currently, it is the lowest in the sub-region.
Yeah.
And I'm going to quote you data. I want to buttress what Professor Mensah said. The whole sub-region, sub-Saharan Africa, our credit to private sector has declined from 10% to 8%. Ivory Coast has 22%. Burkina Faso, 38%. Kenya, 32%. Mauritius, 68%. It means that the banks there are lending to the private sector for economic recovery. Unfortunately, people are buying treasury bills. Professor Mensah said, we are taking the easy way by buying treasury bills and making easy money and declaring good profit. But that does not turn the real economy. So Lord Mensah is making a point, and we should always be very careful. The banks are there to give money, but the microeconomic environment now, plus the DDEP, plus the GATT issues that happened in 2019, the banks are playing it safe so that they can get money to pay for their shareholders and at the same time remain solvent. Now, so that is where the industry, like Professor Mensah said, the industry is in a very, very difficult situation. So when they see that gap, that if we can make money from this remittances area, we go there and we make money, because at the end of the day, your profitability, your solvency, and your liquidity make you a bank.
Now, what I understand is that there are actually some fintechs or some, money or transaction platforms that are actually not licensed, but are still going ahead to do that form of trading. What is the risk attached to that?
You see, during my time in the 2000 to 2015 and all thereabout, every MTO, money transfer company or organization, would have to be licensed by Bank of Ghana. It's a requirement. And every year, you need to go and even renew it. So if somebody comes in and he don't have the license and he's still be operating, that is very, very, very serious. How did he? That is why I talk about corporate governance. If your corporate governance is weak, then you can have certain things come into the system. Because the central bank also, that is why I said the regulatory gap. they should have also noticed it, because they go there every year.
Doc, on a scale of 0 or 1 to 10, how will you rate banking sector's corporate governance?
Well, I will split it into, say, I think 3.
3.
I have the SOEs. The SOEs, I will give them 2/10.
2/10. That's woefully inadequate.
Private domestic bank, the Fidelities and the car merchant bank, I'll possibly give them 5. But then I'll go to the foreign banks. I'll give them 7 to 8. Because in that area, before you even become the board chairman, you have to be proven and a tested person who knows the industry. Unlike the SOEs that I've mentioned, because I belong to a party and I've got a party color and I speak for them, you go there and you find them on the board. Because if you read what Bryce Simon said recently, it's a very good area to be a board member and get your money. So for me, we have a long way to go. We have a long way to go. The corporate governance we've been talking about. Since we find in Ghana, what I think is that we talk too much about things, but when it comes to the action and implementation, we have a challenge, especially for our own institutions.
Now, let me bring in Professor, Bobkin. Prof, I want to show you this chart. Let's show Prof the last chart in our presentation. I want him to see the kind of inflows that we expected to get from remittances. And let's look at, this is actually the gap analysis. Let's look at the last, but this is the slide that I'm talking about. Now, Prof, on the screens right now is the Ghana's top Forex earners that we actually did a computation based on data from the Bank of Ghana and the Auditor General's report. Number 5 is actually cocoa. At the moment, definitely this year will not be getting this high. We definitely will be getting less than $1 billion at the end of the year. Cocoa in 2023 was giving us $2.2 billion. Tourism, $3.8 billion. Oil, $3.8 billion. Now, gold, 7.6. And we'll come to gold because we definitely know that about 90% or 85% of whatever that is mined here is actually exported out of the country. And if you look at the amount surrendered, it's actually very, very little. Now, look at the blue bar, which is remittances. $8 billion if we consolidate the data from the World Bank and the Auditor General's report. We are supposed to be getting somewhere around 8 billion. Huge gap between all other, remittances and all the other 4 top foreign exchange earners. The simple question is, if we know this lucrative means of foreign exchange inflows, why do we still keep, allowing some certain players to get into the space? They are not regulated, they are not registered, they are not licensed, they come into the space, and instead of they being the bridge between the person sending the remittance from wherever that person is sending to the country, we end up getting the CD equivalent in the country, but the dollar component never gets to the shores of Ghana. Doc, Prof, can you kindly explain why some of these things actually exist?
I want to look at it from 3 different channels. One is exchange rate itself, which fuels the non-disclosure and the bypass. But in the first place, what we are talking about here are actually institutions that have been licensed by the central bank that are caught in these infractions. You see, I said something earlier, that this economy is largely dollarized. We are just left with making it official. Why am I saying so? Just take a look at the property industry.
Yeah.
Transactions are quoted, settled in USD. Is that not so?
Absolutely.
Absolutely. So, and look, in a serious country, if you compare to the francophone countries, if you want to make a transaction of maybe about $500, you have no choice than to use the financial system. But the bulk of the transactions in the property industry around is settled in cash. So you see why it's going to be difficult to rope in all the USD and all of that into the banking system, because the bulk of transactions, the big ticket transactions, are actually done off the financial system or the banking system. And that is so because of that, it's always going to be a challenge to try and say, let's reference all the inflows into the banking system or the financial, because a larger portion of transactions we do in this country are actually settled in cash and typically in USD. Okay. Now, why is this so? This is so because for a very long time we have failed, sometimes for political expediency, we have failed to align the official rate with the transaction rate. And because of that, the incentive and the profit, or let me call it the spread from FX trading, is actually much more than you find in other sub-Saharan African countries. And that is why you see almost all the banks, they are reporting more earnings from FX transactions. Apart from the fact that the economy itself, as Lord Mensah said, is more import dependent, the structure of the economy itself dictates this. Even if you look at the lending to private sector, the bulk of lending to private sector is actually in the area of those that are into import. And all of that is just currency trading. Okay? So that is the structure. And because of the spread, the difference between the bid-ask spread is very high. And that is a big incentive. And because the interbank rate, and more so Bank of Ghana's artificial official rate, right, is very low compared to the black market rate, you realize that there is some level of interaction between the black market and then the formal financial system, because the inflows may come through a certain channel, formal, semi-formal, but it finds its way quickly into the black market, because that is where the transaction rate is. And sometimes you see what even the middle class, what they do. You know what they do? They will go and withdraw their dollars from the bank and head straight to the black market and go and change it, because that is where the transaction rate is. So through this multiple exchange rates, low rates we are keeping just to satisfy our political expediency that the exchange rate is rather 15 when it's actually 17 and all of that. It's actually fueling the black market. Okay, as an oxygen to the black market. That is another way to look at it. The other way to also look at it is that once the economy is largely dictating that this is where more money can be made, okay, then you should expect that entrepreneurs and market players would also try to maximize their profit from that line. Okay. And if the regulator is not up and doing, then chances are that they will offset that regulatory burden so as to make more, because they are not making profit from their core business that they should be doing. And at the end of the day, we've also allowed it to be so. We've allowed it to be so because why are we saying so? Go and check the prudential regulations. If they lend to Ghana government, if banks invest in government treasury bill, is zero rated, because we are using the risk-based capital prescription. It's zero rated. If a bank goes to lend to agriculture sector or agribusiness, the risk rating sometimes more than 100%, more than 150%. So if treasury bill is offering a higher return as high as, let's say, 29%, and is zero rated, why would I go and lend to agribusiness or agriculture and I have to make additional capital provision? Who is going to pay for that? When the return from that side, I can't even charge like 50% and get my money back and all of that. So the kind of incentive mechanism we have written through regulation and the structure of the economy is demanding this kind of response from market players and customers and all of us. Because today, if you want to do any big ticket transaction in Ghana today, it's either priced in dollars and settled in dollars, or it's priced in dollars and the settlement is done in USD. Do you know why it is so? They are offloading the exchange rate risk to you, the buyer. So if you are planning, then at the end of the day, you are looking at, okay, If the bulk of the transactions in the economy is done in USD, then I will be accumulating my wealth in the currency
USD.
that is more stable, in the currency that is the dominant transacting currency in the economy. And that is essentially what we are doing. Don't be surprised if highly placed people in this country are all involved in this.
Now,
If highly placed people in this country are all interacting with the black market in one way or the other, because the black market rate is the reflection of the forces of demand and supply rather than the interbank rate, rather than Bank of Ghana's official rate.
Dr. Chani, I mean, you have been in this space before. I mean, is there any form of connection between the dealer banks and the black market?
Well, I cannot pinpoint my hand on it like that, but you still not discount it. You can still not discount it.
Quantify it for us. Quantify it for us, Doc. Let's understand it.
It will be very difficult to quantize it. But when you want to talk about it, the possibility that it exists is real. Because at times, if you want to get foreign currency, like Prof. Bobkin said, the money that you get if you are traveling, this money are wrapped newly. It has not been torn. It happened to me last year when I was traveling. I was shocked that the new 50-pound note from UK came into Ghana wrapped. And that's why I got from the black market. So I asked myself, do the black market travel
you got that from the black market?
Yes. That's why I say I won't be able to lay my hands on. But from my little experience that I have, I cannot discount that. Because I was surprised.
Did you try getting it from the commercial banks, and were there any challenges?
I couldn't get it there. Like Prof. Bobkin said, if I'm traveling, I go, I say I want travel allowance of $3,000. Go and fill this, go and fill that, go and fill that. But when you walk through my friends at the airport there, you says park your car there. They will come and deliver cool money and you go. Because you see, that is the true reflection of the currency. That is the true pricing of the currency. But you see, we try to keep it artificially low. You know, the only time where we had when President Kufuor did the denomination or demonetization.
Redenomination.
Yeah.
When
that was the time. Yeah, that 207, I think, and there
we made $1. We made $1 equal to 1 CD. A CD equal to the dollar.
Artificially. But the question is that was the only time you go to a bank, you get $1. That time I was working in a bank. You go to a bank, you can get $1. The black market people could not get it. And why? Because the bank was, you see. So I would like the economy itself needs to be reviewed very well. Import-dependent economy. What are you producing? Basically, if you take cocoa out, we don't produce anything. The gold you did, 7.6 we did. It is only 1.2 billion that came to Bank of Ghana. 7.6, only 1.2 billion came to Bank of Ghana. So if you
even with the gold, bulk of it is smuggled out of this country.
That one is that one is being ground out, and it's not part of it.
That's the illicit flow of gold. You know?
If you conclude and add those that are smuggled, then I think what is leaving the shore is more than 15 billion every year, because we created a system that it makes it easy people to do certain things and get away with it.
I mean, Professor Lord Mensah, I want us to look at the last slide. I want us to look at the gap between the remittances, what the Bank of Ghana reported versus what the World Bank also put out. If you can help me with that slide on the screen, so that Prof will really understand and appreciate what we are trying to talk about. I want us to connect it with inflation. Definitely, if you send money from outside to Ghana and you send it in USD or in pounds or in euro, and that money does not leave the shores of the Western countries, but you have agents in the country who are paying CD equivalents. For me, I mean, when we did the analysis, we actually concluded that this may have significant impact on the current inflation that we are facing. Because definitely, with very high exchange rates, if you send me $1,000 or $10,000 and it comes into the country, I get more CDs, and then I'm able to chase after the available goods in the system. Meanwhile, the country is not able to get back the needed foreign exchange that is actually back with the transaction. How is this connected with the current inflation that we are having, which is more than 20%?
Yeah, so obviously we should appreciate that. I mean, once you having more CDs available, chasing few goods, I would say yes, there's a build-up in inflation that goes with it. But then also let's look at the scarcity of the forex that's supposed to come into the country that does not end up at the shores of the country. Because once Bank of Ghana gets this money is coming into its buffers, building up enough reserves, it gives a very good signal to the market. And as a result of that, it turns up to give the market certain assurance that Ghana has enough dollars or enough foreign currency to meet whatever demand business.
Prof, not to cut you, but let's show our viewers the last slide so that they can actually
individuals and businesses can have access to. So effectively, in all cases, yes, the pass-through effect will be a price build-up on our market. And then also, let's look at how we have placed emphasis on the dollar over the years. And I always tell my students that, look, the dollar in our pocket is more valuable than the dollar in the bank as we speak now, the dollar in a typical bank in Ghana. And so by so doing, it brings about certain premium to hold a dollar. And that is why you will see people ensuring that whatever transactions they do, they tend to retain the dollar, and then whatever exchange means they may want to exchange, they go ahead. So I'm not surprised you have this, agencies like TapTap, where they tend to, go into transactions for which, the country does not receive, the foreign currency, but then it ends up being settled in cedis because the dollar is valuable. That is why, they're holding it in that manner. So from where I sit, it has to do with the economic orientation as well. If you run an economy where you've made a dollar in pocket more valuable than the dollar that is sitting in a bank, then obviously you create that kind of market where there's a difference between the value of the dollar at different levels. And when it happens like that, there will always be business. So I'm not surprised you're seeing fintechs, you're seeing banks, you're seeing agencies trying to make sure that they profit from whatever the transactions are in the forex market. And like I said earlier, it has to do with economic structure. Every economy, and if you look at the players within the economy, they try to shrink towards areas where they can make more profit.
Absolutely.
So if the forex market avails itself in that manner, they will definitely go there. And that is why you're going to see those abuse of regulations here and there. So I'm not surprised to see these things once again.
Now, Professor Bokwen, I don't know if you see this as a coordinated, action or process where since last year we've had 4 dealer banks. These are registered banks in Ghana. When the first one happened somewhere 2023, almost exactly a year ago, they suffered a 1-month suspension in terms of their license. The same thing happened at the beginning of the year. 2 banks were suspended for a month. And now we are talking about CBG. Do you feel that beyond the corporate governance and regulatory gap, are there cartels, or I don't know if you would like to call it that way, in the banking system that will possibly have their own personal interests above the laid down rules or procedures for some of these transactions?
So,
I can hear you.
Hello?
Go. Yes.
Let's include the central bank itself. Do you remember somewhere 2014 or so, our current vice president, then he was in opposition. You remember he did a presentation where he said Bank of Ghana was keeping the artificial rate so that they could profit from it. Around that time, when we validated the data, the variability, the variance, the disparity between Bank of Ghana's official rate, that of the interbank rate, and then the black market rate was as wide as 45%.
Wow.
Okay,
That's
okay,
huge.
Kofi. Have you read the IMF supported program?
Absolutely, Doc.
When you read the IMF supported program, you see the diagnosis of the IMF about how Bank of Ghana was managing the exchange rate. And IMF disapproval of that procedure. So they encourage a revised way for Bank of Ghana to compute their exchange rate, including the volume of transactions they are using and all of that, as a way of aligning the rates. Because if the divergence between Bank of Ghana's rate, the interbank rate, and then the black market rate is very wide, then you are just providing oxygen to the black market. In those days, when we did those analysis, we realized that Bank of Ghana was keeping the rate particularly low around the time the syndicated cocoa loan would arrive. Then they buy it at that low rate. Is that okay?
Yeah, absolutely.
And then they offload it in the market at a higher rate. The difference is profit for Bank of Ghana. It's not so different from what all the others are also doing. So these remittances, when they arrive, they buy it from the intended receivers at a low rate, and then they reverse it at a higher rate because the spread is high. So
essentially what you're saying that this is not new, right?
This is not new. Bank of Ghana has benefited from this. Others have also benefited from this. Individuals are also benefiting from it. That is why the black market is more active than the market that the light regulates.
Is that your cartel?
Well, if this thing does not benefit the powers that be, the incentive to keep it going will be very low.
I mean, gentlemen, unfortunately, we do not have time to actually continue this conversation. This is where time will allow us to peg our conversation. Professor Lord Mensah is a professor of finance at the University of Ghana Business School. Professor Lord Mensah, also a same professor of finance at the University of Ghana Business School. And my very own friend, Dr. Richmond Etuahine, who is a banking consultant and corporate governance expert. Gentlemen, thank you so much for joining me on this important conversation. I will surely will extend the conversation to other bulletins. And I mean, thank you so much. I'm really grateful that you could join us.